Trying to digitalize the country, but first I have to get the technology to work, so the mic is working. So, thank you very much, everybody, for staying here. Good evening. So it was announced that there is dinner after the session, and the panel here is going to be deferring your sumptuous meal to an extent. And I'm 100% sure the eminent panel here, including our ministers who have kindly agreed to stay here, will make it worthwhile. So, we're going to start the session by talking about path to recovery and fueling growth. Okay, we're not going to talk about the tax concessions or allocations or anything like that. We've got an eminent panel who are going to talk about path to economic recovery, analyze some of the statements, the policy statements which were set out by the ministers, and also look at how we will grow. Okay, so in that respect, first of all, I'm going to probably ask our Deputy Minister for, we've got him on the panel for digital economy. 3,000 million has been allocated to do some wonderful stuff. We understand digital economy obviously can drive economic competitiveness, growth, employment creation, sustainable development, and better service delivery. Can you just outline briefly government's strategy and areas regarding the digital economy, and also how some of the private sector people who are in the audience can contribute towards enhancing that government strategy? Which also includes, obviously, ICT education, especially skills education, all that. Yeah? Thank you.
Thank you. Thank you for inviting me for this very insightful discussion. So in the digitalization, like when you talk about digital economy, it consists of main five pillars. So one is the digital industry, where currently we have about 1.2 billion generating foreign income generating industry currently there, and we are going to expand that to $5 billion by 2030. And then we have a workforce of 85,000 in the digital industry, and that we are going to expand to 200,000 by 2030. Then the digital economy, where the digital-based payments, that's again another pillar we want to increase. The fourth one is about the digital governance. So the government activities, how well we can digitalize and make them more efficient and deliver better services to the public is the fifth one. And also the digitally how we can help other industries to increase their efficiencies, reduce cost, and increase the quality is the other five main pillars. So in that, the current budget allocation helps us a lot in achieving those goals. So we already have about 13 billion allocation for the ministry, and the additional 3 billion allocation was given. In that 13 billion, like already some of the key projects are identified, such as digital identity card. So that project is already identified under the 13 billion, and the additional money that was given will be utilized for various other digitalization activities, such as creating a national data exchange, and also like getting the Data Protection Act effective, as well as the enforcement will be carried out, and so many other things, such as cybersecurity and so on. So the private sector, we are looking to engage in all these digital activities much more than how it was done in the past. So we will be giving lot of priority for PPP kind of models, where the digitalization doesn't have to be only done by the government, whereas private sector can engage and provide digital services to the government. So if I give us some example, like Lanka Government Cloud, which is 100% invested platform by the government as it today, we are evaluating other models to engage private sector and go for such platforms. So similarly to that, digital payments and many other services, we are looking to engage private sector into that.
Thank you, Mr. By the way, there is a lot of questions coming on our WhatsApp group, only targeted towards the ministers. But we have a lot of panel members, so I'll get to the panel members and then, depending on time, come back and trouble you all for more answers, okay? So bear with me. We're going to, looking at the export sector again, getting back to Mr. Mangala Vijay Singh, the chairman of EDB. Recently, the deputy minister, another deputy minister for industry and entrepreneurship, stated that government is shifting its focus towards encouraging entrepreneurship and enhancing workforce skills to drive economic growth, which was also set out in the policy statement a few minutes ago. He said 90% of the country's entrepreneurs generate below 10 million annually, raising the question as to whether they are true business owners or simply earning a living. What aspects of this budget will promote exports and also SMEs to engage in value-added export, trade facilitation, integrate into global supply chain and attract skilled talent to work in Sri Lanka and expand to become large entrepreneurs or businesses making much more than a small 10 million a year? Over to you.
Thank you, Suren. Thank you, Suren. Thank you very much, Piant and KPMG team, for inviting Export Development Board to this panel discussion. Suren, coming to your question, so I want to give some brief introduction about export, because this audience is very much interested to listen to that export development activities. As of both Honorable Minister, they explained about the today budget. So this year, today, I think everybody knows that today even President declared about that this year we want to reach 19 billion export revenue. The speakers, they talk about our previous year's achievement and where is Sri Lanka today situation. So 19 billion export revenue by 2025, this financial year. Compared with the last year, in 2024, we reached 16 billion. Compared with the 2015, it is 3%, 15 billion in 2023, 16 billion 2024. This year, government is expecting 19 billion export revenue by from the export development sector. That means more than 18% growth this we are expecting. So when you look at the export sector, we are having the merchandising export and the service sector export. So according to the current trend in the market, we can see our apparel sector, this 2025 will be a 5.3 billion or 5.4 billion. And again, rubber, tea sector also will play a big role here. And the coconut industry, anyway, with the current situation, we will be line with the 800 million level. But there are some other sectors we already identified, that electrical and electronic market and the gem and jewelry sector and the food and beverage sector and the fish category. Those are the very much potential sector further we can expand. So other sector from the service sector, we are planning to reach this year more than 4.3 billion export revenue, especially from the ICT, again transport, logistic, again the construction industry. So these key sectors right now, this 2025, at the rate of they are working, at the rate of we are getting the information, we can have very much potential situation. But there are potential countries, because everybody knows that right now more than our 40% export going to the European market, including USA, because USA market is our main export destination, more than 25% representation. But we have identified that we want to expand our export to the other countries. While we are expanding our export into the existing countries, we have to explore our export to the other countries. So we have identified that African region, in addition to that Asian market and the Middle East, are the key prominent sector to further expansion of export sector. So that is why even President today, he mentioned about that, Honorable President, we have to go for the P-trade agreement. So basically, we are also proposing that we have to go for the product-specific agreement, P-trade agreement we have to go, because I listened to that Vietnam even presentation, we mentioned about that. So Vietnam, when you look at the Vietnam model, so they are having the complexity of export sector, because in Sri Lankan situation, minus 2.22, but Vietnam, they are having the plus 0.16, because they are into main complexity, export complexity, because they are very much technical products. But when we look at the Vietnam, they, in the 1995 level and Sri Lanka situation also same. But during last 20 years, how Vietnam has reached more than 6% of global textile industry, apparel industry, because of that free trade agreement. Even that electrical and electronic sectors. Because with two sectors, Vietnam has been able to reach more than 500 billion export revenue. In Sri Lanka, still, within last more than 45 years, still we are in the below 16 billion category. So that is why the new government is planning to increase export revenue more than 36 billion within next 5 years. So that is why from 2025 to 2030 level, national export plan, now we have to plan this next 5 years. Based on that, merchandising export we are planning more than 27 billion. Again, the service sector, 8.5 billion. With that, export sector will represent more than 25% from the total GDP. So that is our plan. So when we come to your question regarding that, how about our small medium sectors? So in Sri Lanka, when you look at the export basket, I mean the product price and the number of exporters, even Sri Lankan situation, because more than 10% export below 500 category, 500 exporters, they represent more than 90% now exports value. And we have more than 48% exporters, I mean below 20 million category, their representation for the export sector is 0.28%. And we have medium level exporters, their contribution below 350 million level, their contribution to the export sector, 4.28%. That means 86% exporters from the total export contributing below 4.4% for our export sector. So that is why the new government is planning to scale up the medium category to the next level, and the micro level to the medium level to the small level. And again, this year also we are planning to increase SME sector, large category sector also. So that is why when we look at even our this year budget allocation, we can see government has allocated very much budget allocation for the small and medium sectors. Even to upgrade loan scheme, I think they have provided more than 20,000 million for the SME sector. Why? This is very much important for the economy. So when you look at the SME sector, their contribution to the national GDP, more than 52%. But when you go to the rural sector, SME sector is the main sector to provide the employment opportunity for the rural sector. Their contribution is very good. But when they come to the export sector, contribution is very much low. Even country like USA, their contribution from the SME sector is more than 35%. Even Vietnam model also more than 25%. So our government plan to increase the SME sector contribution more than 12 to 15% by next 2-3 years period. So that is our plan. So based on that, we are doing a lot of development activities, so how we can increase our SME support. So that is why infrastructure development is very much important. So based on that, we have to expand our export processing zone capacity. Again, industrial park situation. So this budget, we have identified new industrial park for the Mana, then again Gold, Trincomalee, and the KKs. Those are the sector-wise specific industrial park. So based on that, we can promote sector basis. Automobile sector, electronic and electrical sector. Likewise, we can plan that our export sector, industrial park level. In addition to that, as Honorable Minister mentioned, the infrastructure on the port and aviation also very much important. So this budget, even today, Parliament, Honorable President mentioned about that, how government is expand the terminal, north terminal sector in the port, and how airport expansion is going on. Those are the very much key sector to develop our infrastructure facilities. In addition to that, we have to do a lot of market survey and the export promotion activities targeting to the export sector. So that is why market survey is very much important. Through the market survey, we can identify what are the potential market to promote our products. Because earlier what happened was, we were promoting the product, but here now we have to identify the market situation. So based on that, we have to align our product sector. So when you look at the Sri Lankan situation, even the negotiation with other countries, we can see there is very much potential. Even the corporate sector level, now they are thinking about the involvement of the export sector. Those are very much important because there are so many things to be explained. The thing is the time situation, so I have to give the other panelists to discuss. If you have the time frame, please give me a time, I will explain further. Thank you.
Thank you, Mangala. I think there was a, good section covered in the aspect of trying to enhance exports and SMEs. Similarly, I think the President also covered it in great extent. But we also need to look at some of the insights around it, okay? So Sri Lanka's economic recovery, if it's going to be export-led, we have a 14% of GDP which has to probably double by 2030, or like Mangla and the Minister mentioned, 19% of GDP by 2025. Roshan, what challenges need to be addressed to achieve such a state in 1 year and 5 years? Because we need to probably double exports. A lot of the measures were mentioned by our Chairman EDB and the ministers as well. In your view, what structural barriers are there to achieve this export growth? And what type of targeted support is required to help SMEs as well as others on an overall basis in a broader context of looking at growth over the next year and the next 4 years? What do you think would be the challenges which need to be addressed?
Thank you. I'll just go back a bit, and I won't talk about the numbers for the current export, the targets for exports, because I think they've already been mentioned. But I just want to go back and look at actually the trajectory. Where has that trajectory of exports been? If you look at 2000, the year 2000, exports were about 33% of GDP. It fell to 14%, as you rightly mentioned, in 2023. But we are now back on a upward trajectory. So I think last year it was about 16.5%, and this 19 billion will be about 17% of GDP. So we are going there. And I think a lot of the panelists mentioned some of the specific targeted interventions that this budget mentioned. But I just want to go back and analyze, in terms of, if you look at why these exports have declined, there are really two major factors. One is really this because of fiscal pressures and populist policies, it led to a lot of protection, which meant that we had very high tariffs. And it's good to know that in this particular budget, we are talking about a national tariff policy where hopefully we will rationalize these tariffs. Because what has happened is we've tried to protect certain industries, very few, it's a handful of, industrialists at the expense of the rest of the economy. So I think that is something that we really need to look at. And that is one reason why this exports have declined over time. The second is our exchange rate. We have over time had an overvalued exchange rate. And that also has been been at the detriment to our exports. So I think now, given the current macroeconomic stability and the macroeconomic framework we have in place, we have put in place, I mean, the exchange rate is a market-determined exchange rate, and central bank has, it's in their Central Bank Act as well as in their policy statements that they will be following a flexible exchange rate or a market-determined exchange rate. So I think these two policies are critical to ensure that we move up in terms of exports. And we also need to keep in mind that we are there's an economic slowdown globally, as well as there are various geopolitical factors which are outside our control. So we really need to focus very critically on what is absolutely necessary to increase our exports. So as I said, market-determined exchange rates and less protection, that is liberalizing our trade by reducing effective tariffs. The other one is, of course, because if you look at the experience of the countries that have grown the exports exponentially, it has been on the back of foreign direct investment, because we are a resource-constrained country. We don't have enough resources to invest what is necessary in order to create the kind of industries or the services that we need to bring this kind of export, to have this export trajectory. So we have to really attract that investment, and we know what the constraints have been in terms of attracting investments in the past, policy inconsistencies, the ease of doing business, etc. So I think those are things that have to be addressed. And finally, of course, we have to also have some kind of complementary structural reforms, like labor reforms, which are necessary, and also a level playing field, which will be necessary if you want to bring this trajectory up. So I just kind of did a quick search of the different, in the last 4 or 5 budgets, what are the policy measures that have been proposed for exports. And unfortunately, many of these things that we mentioned in this budget, some of them at least, we have heard over and over again in previous budgets. So if I can explain, we had a national export strategy, I think for 2018 to 2022. I don't think that got implemented. We have had, the free trade agreements have been mentioned, and I think the importance of free trade agreements in many budgets. But have we actually utilized them to the maximum? Then this elimination of para-tariffs, and I think it's similar to this national tariff policy. That has been also proposed in the past, but we have not really seen much movement on it. Then the single window, that again we've had it in many other budgets. And also this thing of importing raw materials for export, or removal import taxes. So my point from this, and I think Murtaza also mentioned this, is implementation is key. We really have to be serious about this, because we have a very short window within which we have to start paying our external debt in terms of capital repayments. So if we don't get our exports up by then, we are going to be in serious trouble. So I think we really have to be serious. We've got to put these in place. So yeah, and maybe I can talk about the SMEs in the next round.
I think varying from this, Dr. Harshana mentioned about implementation in a very serious note. So Dr. Roshan was sort of saying all these suggestions have been there, but implementation was lacking. But two suggestions I like, which is there, is I think using diplomats to do some of the export thing was good thing, and also leverage expats to expand, the export markets was probably 2 new things, I guess. How do we improve implementation, Dr.? Any plans?
Implementation has multiple facets to look at it, depending on the scale that we are looking at it, depending on the type of project that the funding have been allocated, etc. But if you look at the specific area that you asked in relation to reaching out to new markets, perhaps making use of our diplomatic channels that we have, etc. One key item in this budget is budget is prepared as a basis for businesses to take off. The political stability, the consistency is there. Now the budget is to give the required push and the support for businesses to take off, meaning new production capacities will be added, extra volumes will be created. So obviously it is natural we look outside our local markets, and there it is the very interesting element that making use of our diplomatic channels to promote our produce that we have from Sri Lanka, whether it is from the agricultural sector, fisheries sector, or electronic sector, or any other segments that we produce in the country, to reach out to new markets. And obviously, in addition to using this traditional approach, we have commercial attaches in almost all the embassies or diplomatic channels that we use. However, it is not KPI driven. To understand, their activities are not connected to generate the type of leads that we want. So a lot of discussions are going on as of now to understand KPIs, to build pipelines, to connect local manufacturers, businesses to foreign clients, etc. So a lot of activities in place. As we all understand, implementation is key. The determination from the government is to make sure the political will and the support is provided to all forms of government agencies, including to the diplomatic channels that we have, to reach out to new clients, to explore new markets. For political at the highest level, we have engagements with other governments to look at new opportunities, to connect our businesses to supply their produce, etc. So that is one angle. On the other hand, the capacity of the economy will be expanded by making sure implementation of these large projects that we discuss about, because let it be for the irrigation side of it, let it be for the ports expansion, let it be for the energy sector, all these add capacity to the economy. It will bring down the cost of individual unit. It will increase the competitiveness of our exporters, etc. So combination of these factors, aspects, we will, through this combination of efforts, we will expect the supporting of the expansion of the economy in one hand, and the expansion of the great task in terms of taking our exports to the 19 billion factor. So we believe with the multiple efforts that we are putting, combined efforts, we will be able to get there. Thank you.
Thank you, Mr. The favorite topic of the day basically is to do all these things. We need a banker from, we have Damit here, who's going to talk a little bit on those sides. But overall economic outlook and debt sustainability is going to be key for investor confidence. And at current levels, I think we've noted from the press and all that, investor confidence and general public confidence has been on the rise. And everybody is expecting a recovery and economic growth, obviously. The only issue might be, I mean, Roshan also talked about market-based exchange rates and several other factors which will affect FDI has to flow in. That depends on confidence. So it's also going to affect banks and the country at large in terms of economic growth. So there's a potential risk of currency depreciation or higher interest rates. Hopefully won't happen, but there is a potential risk, which can have an impact on corporates with foreign currency exposures and large borrowings, and also impact the public finance. Like the minister said, if he saves 1% of the debt servicing, you can increase the salaries of the government employees. What aspects of this budget are important to ensure debt sustainability, Damit, and lower costs of servicing of debts? What is your view on that?
First of all, thank you, KPMG, for having me. Before answering the question, I think we should express this budget is a progressive budget. And we have seen multiple instances where it is going to support and facilitate businesses generating revenue. Whatever the conversations that we have, I think the elephant in the room is the debt sustainability. That's what we are trying to resolve in the medium to long run. So we have two perspectives on debt sustainability. That is, what are we going to do until 2028, where we have a moratorium and a grace, and how do we get ourselves braced to service debt beyond 2028. So one thing that we have observed in the budget is government has opted to rely on investments than debt. They speak about private-public partnerships and promoting FDIs. So that's a good sign, provided every ingredient that speaks about falls into B in terms of policy consistency, ease of doing business, etc., etc. So also there are enough opportunities that we find from a bank's point of view where the Sri Lanka has enough opportunity in terms of investments. If you look at the port city, and the budget talks about sector-specific industry zones, export orientation, and it promotes taking advantage of the logistics of the country, inland container depot, about the dry port. All these things brings opportunity for investments. But at the same time, how does it contribute to maintaining the debt sustainability? If you look at the numbers, we will see approximately 60% of tax revenue is going for interest servicing. So that's where the equation starts. Even if you look at the reserves, which are at maybe around 6 billion today, $6 billion, if you net the Chinese swap, and also if you look at, if you account for the debts that has to get serviced this year, maybe perhaps $3 billion. So we need to seriously think about the revenue generation side, which the budget is talking about, specifically on the export generation side, and how can Sri Lanka be part of value chain of a bigger enterprise. So those will definitely add value to building reserves and bringing that much needed foreign revenues. Also, we see quite a bit of potential on the capital market side, and also the budget addresses it. So there is a huge untapped potential, which will encourage once again investors, not only from the point of view of infrastructure, but also from the point of view of financial market investments. There is an opportunity. So all these things brings confidence to the market. Investors will be keen on bringing in investments, because there is a possibility of taking the money out as well. So in that backdrop, I think if these suggestions or the proposals that are brought in by the budget are implemented, I saw the Murtasai saying implementation is the key. We maintain the same position. So there are lots of things scattered around that is proposed, which needs to get implemented if you want to address the elephant in the room. So at the moment, if you look at the key parameters of the banking sector, interest rates are low, enough liquidity in the market, both dollars and rupees. So that means the banks can lend. The private sector lending has increased significantly over the last 2 quarters. That means there is an appetite for banks to lend. All these industries that we spoke of, SMEs, exports, logistics, other infrastructure, require bank lending. I heard Dr. Surya Perumas talking about getting expiring long grace periods. I think we should endeavor to, at the worst case, if the investment cannot be sourced, whether we can rely on long-term borrowing at very concessionary rates, maybe 30, 40, 50 years of repayment with 10, 15 years of grace. So that will even out the debt sustainability capacity and the possibility of we are making debt repayments on time. So banking sector is liquid, rates are positive, but there can be, with the demand coming in for credit, slight upward pressure on the rates. With the vehicle imports are starting, we anticipate there can be little pressure on the exchange rate, which might push maybe slight depreciation on the rupee. So, but still, we don't think it is unbearable for the growth that is anticipated. In a good administrative point of view, given the last maybe quarter or maybe last 2-3 quarters of the calamity that we had on the recovery side in terms of bringing in certain legislation, we were happy to see the bankruptcy laws are being pushed for expedition. So that's a good sign. That is something we believe that we should have had for a long time. So given all these things, there were lots of work that we believe that we have to do to ensure that debt sustainability is met. But we are hopeful with the progressive proposals and that the implementation capacity that we are confident of the country is having. So we should be able to meet the required targets. But the key fact is that we need to be mindful, given that we are in the EFF. So we have a breathing space until 2028. All these plans that we have worked, I think, should get implemented as fast as possible, because most of them are medium to long term. So investments that are coming in immediate term, maybe into the next 12 months, is critical. So provided that those things will take place, we believe we still have an opportunity that we will continue to meet the debt sustainability requirements.
Thank you, Damit. I think that's key, I suppose, meeting all the economic recovery activities within the next 1 to 2 or 3 years. A quick fire answer only. Somebody has sent a question asking for some finance from you. One of the major forex income generation in Sri Lanka is shipping and logistics. There is a focus on logistics also in the budget. Yeah. How are you prepared to finance shipping related activities such as vessel acquisition, marine related capex financing? A short answer only. How is HMB prepared to finance shipping related activities such as vessel acquisition and marine related capex financing?
That's a tough one, actually. I don't think...
That's a specific question I had to ask.
A very, very specific question. Vessel financing is a very, very specialized type of financing. Okay. I don't think many of the financial institutions has that technical capacity. But so we are willing to take the risk and see what are the opportunities. We have seen in terms of cash flow generation, there are capacity expansion that are happening in the port with multiple projects going on. So even though we have the appetite and the liquidity to support the sector, maybe a little bit of a technical support is required to assume the risk levels that are specialized in vessels.
Several caveats, so just watch out, guys, whoever asked the questions anyway. Dr. Adil, another question. Previously, the government gave priority to foreign investments more than investments by local companies, which means the concessions, tax concessions are given for foreign investors, but not for local investments. We understand the importance of forex, it's necessary. What is the government's view is what somebody has asked.
Thank you very much. In fact, we do not have any preference of one or the other, or just giving subsidies or exemption for one over the other. So basically our objective is to create a really conducive environment for everyone, the level playing field within the given rules of the game. So it's open for everyone. So sometimes, like as I just told you, so that's good if all the players are equally strong enough. But there are some weaker the players and sectors, and especially at the grassroots levels. Yes, of course, in the SME sector we would support them. And however, to really win this game, we need more investment. The trade and investment promotion is a key. Then only the value can be created. And this value creation, on the one hand, really adds to the government coffer. So we would increase your government revenue. At the same time, of course, now there is a threat for us that has also been understood. That is the external sector. External buffer is required. So we know that when we trade with the world, it's very pragmatic that we assumed that relationships continue. So if we assume that there would not be any relationships, so only standalone transactions, actually this the balance of payment issue has to be really clear of. For example, if you export for $100 and import for 80, so what are you going to do with this 20? So you can't do anything unless you import goods. I mean, if you just assume that nothing would happen. So the world reality is continuation. So therefore, we need to have kind of excesses from this balance of payment by increasing our exports and bringing more investment. So because we see a risk maybe by 2028, as of now, gradually the variables are adding to our external buffer. So that is one. And again, so I would like to say something about the budget as well. We have held many seminars, discussions in the past. Traditionally, we have perceived the budget. But I feel like most of the cases sometimes our practice, our experience is something like no matter what we talk, whatever the things in the budget, at the end of the day, things happen based on the fancies, whims and fancies of the politicians. So therefore, everyone is normally neglect all those things. So we may talk about, everyone knows, officials, the experts, so you do your businesses. But I feel this time, it had made a difference in your feeling. From my gut feeling, I sense like you may have at least thought that just this budget would do a change. But I don't request you to praise it, but criticize and evaluate, critically analyze. Of course, our challenge is, the first challenge is to spend the allocated amount in the given lines, and that is the biggest challenge. If we can do that, of course, the next the step can be taken in 2026. So better be hopeful, and we create that in the environment. You earn, you create value, and at the end, we would we really focus for a good tax system where everyone feel that I must pay tax. And it will not be a system that we go and chase behind you and pay taxes. Because as of now, everyone tries to evade and really avoid taxes. So I'm hopeful that, because why I'm saying this, including our President, Andra Kumar Dissanayake, and the government, everyone has this political will. I can give that assurance across all the ministers and across all the public agents. We will work together. Thank you.
Thank you, Mr. Minister. I think there are good investments shown, and hopefully, if all those investments are made, like Dr. Harshana also outlined, you have to invest to get a return, obviously. So the return can be seen. Since the Minister talked about tax and tax policy, we'll get to our Commissioner, Mr. Nafil. Enhancing tax revenue by simplifying tax structures and widening the tax net has been a regular budget presentation. What would be the specific aspects that will improve the situation to collect more taxes rather than collecting higher taxes from the same group of people?
Yeah, thank you, Mr. Swain, for inviting me for this forum. As my minister said, he encouraged everyone to pay voluntarily their due tax amounts. So that is the first one, to collect the correct tax. Second one is from the side of IRD. We have to give our efforts to collect the revenue. We have to collect more information, because this is I'm moving about the forensic audit side. If any taxpayer avoids avoids making any tax payments. So it's our duty to collect correct taxes. So we have to get information from the formal sector plus in different way from the informal sectors. So IRD has planning to collect more information. You know, the last time under the previous regime, one Gazette notification was issued in which a number of institutions were named to give their information, especially bank should give their current account details of their customers on quarterly basis of their deposits and the withdrawings. Also, we have to collect from the RMV sites because this vehicle importation is now open. So we will get more information on the importation side of the vehicle, so we can get the people who are importing the vehicle, whether they have declared their enough income for their importation, so that is another source. And also, we are, since this withholding tax is increased, we will get more tax income in advance rather than what we collected in the past. So this is the strategic plan to collect the tax revenue. Meantime, we have some other issues as well. Since because of this removal of SWAT scheme, we are compelled to expand our refund branch. So we have a limited resources, very limited staffs, around 1,000 staffs are altogether working in the tax department for tax purpose. Out of that people, we have to deploy number of staffs to the export refunds once this SWAT is removed. And also, since this SWAT withholding tax has been increased, going to be increased from 5 to 10, and the people are allowed to get their refund on quarterly basis, I think most of the population, half of the population will queue up in front of our office to get their refunds. So our 23 branches become very busy. So it's a challenging task to us to complete the given time period. Thank you.
So need we simplify the tax administration and tell everyone to go digital, I suppose, which is GovPay, the government pay mechanism. Hopefully will make it happen in a more smoother and faster way. Thank you. Just the last one, Rivka, from your analysis as a tax practitioner, what are the potential other proposals which can be covered or which should have been covered in the budget for economic prosperity or growth? What do you think?
Good evening, everyone. So I think the KPMG pre-budget, our theme was fueling growth and unlocking tomorrow. And I can't help thinking that the national budget is aligned with that theme of fueling growth. One key thing, I think kudos to the deputy ministers and the president as well, was certainty is continuing. I think there was a lot of talk about can a super gains tax be introduced again? Where are these reliefs going to come from? Will there be a chunk of tax being taken from some of the larger companies? But that didn't happen. And I think you put the context right, sir, with your speech saying certainty. And I think we are going with the canons of taxation, certainty, convenience. We've seen that. But I think something that is lacking, if you don't mind, sir, me saying this, I think in relation to the tax administration, still what we see is a slight tinkering of some of the tax policies, whether the National Tax Policy Commission should be in place. And also, we have seen that the Tax Appeals Commission, there's a lot of administratively being very stringent. And this could lead to grievances, whether the tax ombudsman, the office of tax ombudsman should be established. This has been spoken about before as well in proposals, but I think given we are trying to enhance the confidence of the taxpayer, it would be good if there is a place to go speak about the grievances that are there. So a tax ombudsman office may be something that could be looked at in the future. But overall, I think the budget mainly goes in line with the taxation theories. Only aspect is equity, where broader shoulders has to bear more burden, but we do see this time still 75% is from external, from goods and services and import taxes, while 25% is still from income tax. That should gradually tilt down, and so that the regressive nature of the tax policy should be reduced, and that is something I think maybe the honorable ministers can look at for the future.
Thank you, Rita. I think let's close up because there are two blinking screens in front of me which is saying time's up. Sorry to keep the ministers delayed till such late times, but I'm sure you work in the parliament till late. So thank you very much. Thank you, everybody. And over to our MC.
Thank you very much. Thank you very much, Mr. Surin. And we would like to thank our eminent panelists for being here and for taking part in this panel discussion. We would also like to invite Mr. Priyanka Jayatilaka, our managing partner of KPMG Sri Lanka, to join us on stage as we would take this